Well, good afternoon, everyone, and welcome to our meeting tonight. And thank you for taking the time out of your day. And I'm sure you've had a full day, like all of us have, that have worked on a job and got families and obligations, responsibilities at the end of it, after work. And so to log on for 30 minutes after work, we don't take it lightly. We do appreciate your time. We're going to talk about something tonight that is affecting everybody in some way. These are folks that we are close to in terms of relatives, close relatives. These are folks that we commune with, whether it be work, whether it be church, whether it be neighbors. That is understanding this thing about money and not really being clear on what to do next and how to get the financial house in order and what order should we work on the financial house in. We're going to discuss that tonight for just a few minutes. My name is Ricky Pitts. I'll be your host for tonight. And on behalf of Bessie Cooper Harris, the other regional vice president, again, we thank you for your time tonight. I'm not going to spend a whole lot of time on that company because it's so huge. I'm sure you've all heard of Primerica. It's 151,000 people in all 50 states, Puerto Rico, Guam, they're all over North America. So I won't belabor the time there, but I do want to talk about really 4 points that we believe everybody has to take a look at some point or another. Getting properly protected, start investing for the future, learn how to become debt free, and earn additional income. All these things are important, not just for us, but also for the next generation and the next generation. And we have to dig down and see what needs to be done to put these things in place now. The way we do that, we teach people how to take control of their money, and not just by making decisions, but by making informed decisions. What has happened over the years, people have just made spur of the moment decisions, and it affected them for the next 10 or 15 years. Well, how do we do all that we do in just one company? Well, we can't. We had to have partnership. So what you see here, Rocket Mortgage, Fidelity, Voya, Lincoln, Equitable, all those companies there are our business partners, and that's how we do it. We can now meet with a client and build their total financial house from ground up. Takes a little time, takes one or two or three meetings, but once it's all said and done, they got a solid house in place. Let's talk about that first bullet point, getting properly protected. Why is that so important? Well, almost half of Americans have no life insurance whatsoever. And those that have life insurance admit we don't have enough. Has anybody in the room tonight ever seen anyone or you've heard of someone close to you that died and had no life insurance? Do you know what it did to their families? How it affected them, not just for a month, not just for a quarter, but for 5, 10, 15, 20 years. And sometimes they never get over it because that income is gone all of a sudden. Let me give you an example here. Here's a young couple bringing home $3,500 a month per person after all the deductions. But the problem is that's 7,000 altogether. The problem is 7,000 is also going out of the home. And that's going to cause a lot of problems because it's hard to make it on just one income. And all of a sudden now he's gone. How in the world can she make it on $3,500 a month? Now that problem could have been solved. And I've seen cases to where I'm sure you have as well, where people are living real good. They call it living large. You heard that, living large, and driving nice cars and wearing nice clothes and have no life insurance at all. Ladies and gentlemen, that's not right, and that doesn't have to be. And I think the reason that that's happening so often is that folks are just not informed on how to make sure that the family is okay in the event of their demise. Now look at this program that's being sold all over the country. It's called Index Universal Life. Now we don't agree with this concept, but let's talk about how it works. John is 35, his wife is also 35, and they're paying $251 a month. The agent told them that if you don't touch that money, keep putting that aside every month, by the time you're 65 years old, you will have $127,000. Now they can put that same $251 in the budget. They can have the same amount of coverage, $250,000 each. The difference is it's going to only cost them $88 per month. That's $163 per month less than what they were paying. They're going to take that $163, put that money in a Roth IRA, and by the time they're 65 years old, that's $300,000. On the other side, $127,000. Let's talk about that just for a minute. This is not a trigonometry. This is not a real math equation. This is just 2 plus 2 is 4. On one side, they're going to have 127,000. On the other side, over 300,000. On one side, they got to borrow out their own money and pay interest. On the other side, they don't borrow, they withdraw. On one side, at death, the family gets the insurance or the savings, not the total of the two. On the other side, they get the investment and the insurance. That's a simple solution that should not be hard to make, a decision rather, but a lot of folks are having a hard time because of the way that product is sold. There's something called the theory of decreasing responsibility. And all that means is in the early years, we've got to have a lot of coverage because you see what's going on. Young kids, high debt house mortgage. But as time goes on, ladies and gentlemen, the need for life insurance is going to come down. The kids are grown. You see what's happening. The debts are lower. The mortgage is paid. As time progresses, we've got to focus on having real cash, something we can use while we're walking on top of the ground. But that takes a plan. That doesn't happen automatically. There are two risky situations we have to always be aware of: dying too soon and not having enough life insurance, living too long and not having anything saved. How many of us know people that have worked hard all their lives and they cannot come home? Why? Because they didn't have anything saved. I watched a documentary the other day about people still working at 80, 81, 82, 83, 84, 85 years old, not to stay busy, not to stay active, to pay the bills. Let me show you an example here. This guy is 65 years old. Started working at 25 years old, been working now for 40 years. Here's his situation. He has less than $50,000 saved, and he worries more about running out of money than he does about running out of life. Ladies and gentlemen, that didn't have to be. Had someone talked to him when he was 25 years old and encouraged him to start now. I heard one of the guys that was 80, I think it was 83 years old, he said he's telling everyone right now, as soon as you start working, start planning for retirement. How many know that time does not stop? And now we realize it more and more. As we get older, we realize it's consistent. So, has someone talked to him when he was 25 years old? Got him to put aside $25, well, let's say $50 a week out of every paycheck. Let's say he did it all by himself. That's $200 per month. Had he done that from 25 to 65, he would have had $943,000, and that's at just averaging 9%. $943,000 versus $50,000. That's a travesty. Well, what's going on is people don't have these account systems in place. To have a good system, we need to have 3 accounts in place. One is an emergency fund. Why? Because they can come up anytime. 2 is a short-term account. That's for a down payment on a car, on the house first, then down payment on a car, buying a computer, buying an air conditioning unit for the home. This is short-term. But then there's a long-term account. That's that long-term, that 401k, 403b. That is that 457. That's that Roth IRA. That's that TSP. Something that is a tax-sheltered account that allows us to put money aside, and we get sometimes a tax deduction, all the time tax deferment on the earnings. And in some cases with the Roth IRA, well, in all cases with the Roth IRA, under certain rules, at 59 and a half, you could take all the money out, every dime of it, and pay no taxes. and pay no penalties. That is a big deal. And we have got to do a better job of communicating that concept to the next generation so they can be prepared because it's coming. Number three is learn how to become debt free. Now, that is one thing right there. This debt is paralyzing so many people. They can't move, they can't sleep because they're worried about all the obligations. Well, what's going on is this. The average American has over $101,000 in consumer debt. And of the 61% that have credit card debt, 23% go deeper in debt every single month. And many of them they have late payments. They say, I just don't have it. And don't even worry about it. And the FICO score takes a nosedive. There's a way out. And that way out is to have a plan and to work the plan and really have a coach to hold your hand and also to hold you accountable. That's a big part of it. We got something called Plan A. We're going to look at Plan B. Plan A, you see what they have. All those 5 obligations, $2,700 per month. Well, $2,720 per month. At some point, that top bill there, this is Plan B, that retail card is going to be paid out. They're going to take that 220 and roll it to credit card 2, which is 353 right now. Add that 220 to that 353, sending them 573. At that point, 573 is going to be freed up. Add that to the car. Soon, 1124 is going to be freed up. Add that to the other credit card. Now you got 1427 freed up. Add that to the mortgage. Now what happens is discipline just unravels. Anytime we free up $1,000, $1,200, $1,500 a month, that little disciplined person gets in our ears and say, get you a brand new this and a brand new that. You deserve it. You work hard. Get you an SUV. Pay you $800 a month. You could pay it. You just freed up $1,500, and now the cycle starts all over again. If they don't do it, if they follow this system here, which is simple, look at what happens. If they don't do it, they'll be in debt for 23 more years to 58 years old and pay $214,000 in interest. If they do it, they'll be out of debt in 9 years. That's 14 years sooner. At 44 years old, they're going to save $130,000 in interest. You see, we're trying to teach in this company. Let's make sure as best we can, as we get closer to retirement, closer to our journey's end on that job, we can be completely out of debt when it's time to come home. No house payment, no car payment, no credit cards, none of that. The question then becomes why? Why are people having all the problems when it comes down to money? One is most people don't have a financial education. Most people don't have a financial game plan, and most people don't have a financial professional. And when those things are not in place, it's going to be some real problems, not on Wall Street, on Main Street. So the question then becomes, people don't plan, or the statement is, people don't plan to fail, they fail to have a plan. The problem is the financial institutions, traditional financial institutions, come in and sell them another product, a mortgage, credit cards, installment loans. And before they turn around, they have arrows going out of every direction, over here. And they say, Lord have mercy. I'm going to work just to pay my bills. And sometimes that affects their morale, that affects their confidence, that affects their attitude. I don't want to go to work because everything I have is already gone. How do we deal with that? Well, there's a solution called a financial needs analysis. And all that means is this: let's put it on paper. Let's take a look at what's coming in. Let's take a look at what's going out. And let's put together a strategy to bring it up under control. And ladies and gentlemen, that is not as hard as we may think it is. It's taking the time, setting it aside, scheduling time to get the financial house in order. The fourth point is earning more money. Now, why is that so important? When you look at the fact that 57% of Americans will have a hard time if they had an emergency, I mean a real emergency that was going to cost $1,000, they couldn't put their hands on $1,000. That's not a criticism. That's saying we've got to make some changes. If I've been working now for 10 years, 5 years, 2 years, and I can't put my hands on $1,000, it's because something has gone lacking somewhere. I wasn't trained or taught the value, the concepts of money, and that's what happened. And folks will find themselves living paycheck to paycheck. Now that means we got to give ourselves permission to do something part-time, to make more income, 1,000 a month, 500 a month, and it's okay. And not to worry about what people are going to say if you get a part-time job. Oh my goodness, they must be hitting hard times. People are going to talk if you do good. They're going to talk if you do bad. They're going to talk if you do nothing. I want to show you something. These 3 people right here decided to work part-time. Look at what they're earning per month part-time. From 500 to 3,000 a month, that's good money. Then there are those that decided, hey, listen, I'm sick and tired of my job. I don't like it anymore. It's not fun anymore. And I don't have any potential to grow anymore. I don't like the politics that they're playing. Is there a way to do it, make a whole career change? Ladies and gentlemen, yes, it is. But it takes a made-up mind and a heart that's fixed to make that change. I'm going to show you some folks that did that and look at what the income that they're earning. 6-figure incomes here. You see what they did for a living prior to coming on board with us. They came on board and the company allowed them a chance to build a business. Very similar to real estate. In real estate, you can become a broker. You can have your own office. You can bring in teachers and police officers and state employees and company employees. They can get their real estate license. They can sell houses part-time. Well, Primerica allows us the chance, if we like, to do the same thing. We could build a team. And by building a team, you make a percentage of that team volume. You don't get any of what he did or she did. But there's something called an override as a result of building a team, just like in Century 21 or Berkshire Hathaway or any other real estate organization. Now, here's a group where they did a little bit more. They're making over $300,000 per year. Ladies and gentlemen, what I'm showing you right here now, you see that income and what they did for a living. This is not mystical or magical. This is purely mathematical. If we come on board, we learn what we do, get the state exams, we too can do the exact same thing. And many of us have already done that. And what we're saying tonight is consider. This is not for everyone, but for someone tonight that's sick and tired of being sick and tired. You're tired of all the politics on the job, looking for something better. This very well could be it. You see, the question is why? Why are so many people failing when it comes down to that dollar bill? Because most people, when it comes down to that dollar bill, they conform. They are indoctrinated. They've been taught, get you a real good job, and it's going to turn out all right. But the question is, how is that turning out so far? Not just for you, and maybe for you, but for some of the people that you know, the children that have gone to college 4 years, 6 years, 8 years, some 10 years, and they have the student loans to prove it, and they're still, my mama say, here's what mama say, living hand to mouth, hand to mouth. Again, that's not a criticism. It's just a pure observation of what we all see around us every day. It's time to make that change. Now, just to kind of sum this up, here's an example. This little red house. They need to lay the foundation first, get life insurance, get a budget, get an emergency fund, get a will, get out of debt, invest money for retirement, then college, then other goals and dreams. And do it in that order. You see, if something were to happen to an income earner, they got all these lofty plans, they're going to do this together, and all of a sudden one dies, and they don't have that income covered. all the plans are over. Listen, ladies and gentlemen, let's be responsible. Let's take the time to make sure that our family is okay. That's just the right thing to do. If you're a husband or wife, that's just the right thing to do. If you're a single mother, that's just the right thing to do. Now, here's an example. Here's what I mean here. Let's go back to the beginning. 35 years old, 250,000 on each one of them, $88 a month, 30-year level term. When I say 30-year level term, in 30 years, they don't need as much because the kids are grown. We talked about that. We also found they had $20,000 in the bank making next to nothing. We took that out, put that in a mutual fund. We added $258 a month to it. And at 6%, that's almost $400,000. At 9%, almost $800,000. People are really destroyed for what they don't know. It's that lack of knowledge. And what we're sharing is very basic. Let me show you something else here now. If you decide to work with us part-time, what would you get? Well, number one, education. Number two, flexibility. And then number three, part-time, meaning you don't have to quit your full-time job. You can do it part-time. If you decide to go full-time, it's up to you. If you decide to go full-time, just really go full-time and work it like a business, not like a little hobby. But those who want to do it part-time, making income, learning how money works, just to pass it down to the next generation, is worth it to get a license. It's worth it to get a license just for the education, not to mention the compensation. Now, what does it take to get a license and to come on board? Let's take a look at that. You got to pay $99 plus $25. That's $124. That takes care of the state application, the exam fee, processing, got to be fingerprinted. The $25 takes care of your online support system. You got to study for a state exam. All the material is online. You have your own website, phone discount. That's worth $105 if you did it on your own. We're not trying to make any money for bringing people on board. The company don't want to just bring people on board. I want to bring them on board, get them licensed, and help them to become productive for themselves and for the company. So let's say you decide you want to get an investment license. What would that cost? Well, about $700 and something. But if you came on board, the company is going to take care of that. All you have to do is come on board and be willing to study for your state exam. Now, I want to just bring it to a close by saying this, and I'm going to show you a screen here. You can do this. You can do this. You can get out of debt. You can save money. You also can get on the path to financial independence. That company right there can help you get it done. The company has we're right at 3,000 people working in that headquarters. Those 3,000 are supporting all 151,000 people and millions of clients. Primerica is real. And don't let anybody tell you any different. Just Google it. Check it out yourself. It's listed on the big board. PRI is our ticker symbol. You can't decide to be on the big board because I want to be on the big board. There's some stringent qualifications to get that done. Ladies and gentlemen, we want to thank you tonight for taking the time out of a busy agenda to listen in. Want to encourage you to get with whoever brought you out tonight. Sit down one-on-one and talk about whatever is needed in your situation. Getting out of debt, having insurance, investing money, coming on board part-time. And don't fall prey to the enemy. You know what that is? Procrastination. I'm going to get around to it. Here we are right now. The whole quarter of the first quarter of the year is gone. Third into the second quarter, we're going to turn around. This whole year is going to be gone. Time marches on. We're going to have another meeting just like this meeting on the 30th of this month, the last of April. April 30th, if that's on a Thursday, that's going to be the last meeting for the month. We'll send out the Zoom link to whoever brought you out tonight. I'd like to encourage you to attend the next meeting, register or allow them to register you themselves, and also invite friends and family to attend. Hey, thank you tonight. Have a great rest of the night. We'll see you again on the next meeting on next month. Y'all take care.